Hey guys, and welcome back to the ASX Investor channel, and welcome to another interview. Today we'll be diving into the cybersecurity sector. We all know that with the digital adoption and the increased digital integration that we're seeing on our day-to-day life, how important this is, both for an individual lens as well as a corporate and company lens. And today we'll be talking about the story of Tesserent, one of the leading ASX-listed cybersecurity companies. They've had quite a transformative 2021 with significant company progression. They've had actually a new alignment in terms of a go-to-market strategy and a refresh for the marketing too, which is going to be fascinating for us to unpack. Today, we'll be joined by Hansen, the CEO, and James Jones, the CFO of Tesserent. It's ASX TNT. We're talking about the story and as well as what to look forward to over the next year up ahead into 2022. Guys, welcome to the channel. It's great to have you join us.
Great to be here.
Great. Thanks very much.
Probably an interesting first place to start. Tesserent, it's to be that clear cybersecurity choice for Australia and New Zealand. Can you guys talk to us about that mission and that focus that you're really working towards?
We started this mission two and a half years ago, and that was when my previous co-CEO Julian and I got together and we put together that Cyber 360 vision, and then we went about that was sort of FY19 going into FY20. And we brought together a few of those assets to start that journey. And then obviously, as we started to get, I think positive reinforcement around the market and what we were doing, Jeff joined us on the board. And then we really accelerated to put together those 6 acquisitions we did in FY21. I think we were the most acquisitive business in FY21. And I think it probably almost sucked the life out of our previous finance team. So James had to come and join us before the end of FY21 to resuscitate that. So we had some challenges there, but really what we've put together now is a full suite of cybersecurity services from, I've heard you say this as well, from the boardroom to the basement, around strategy, consulting, putting together the critical product controls that clients need, managing those controls if they can't manage them themselves, and also doing a lot of monitoring and detect for that. So that is really, and that really then followed before we got to the end of FY21, we then did a reorganization around the business units that had service lines that were sort of complementary with each other that needed to be taken to multiple clients. So we obviously had some clients that had 1 or 2 service lines from different businesses. And now with some of those clients have now taken on 5 or 6 service lines. We needed to be able to communicate to them as Tesserent rather than as Pure Security and Heirloom and Rivium. Come and meet this guy and a different business card and a different ABN and a different MSA contract, Master Services Agreement. So I shouldn't use an abbreviation. So that's really where we got to. And so we've kicked that off coming into FY22. The journey is not complete yet. We're still building. We're still working out, and we've also brought 3 more businesses on board. As you would have noticed, we've had Loop Security come in October, and we announced 2 more last week, which really I think underscores the strength in our federal business. with North and Ludus, we were already well on top of being a key player in the cybersecurity services consulting market, but with Clarison and Pearson joining us, I think that's effectively doubled our footprint, in Canberra. So we pick up a lot of departments we didn't have customers with, and we've got we've added another 80 people to the team just last week.
It's been a rapid period of growth, and I guess just building on some of what you talked about there, I've heard you phrase it as the house of brands to that house of capability. Obviously, rolling them up, it's not a straightforward process, but you're in the midst of it. Can you talk about the synergies you're hoping to unlock and how the adoption has been so far when you are going out to customers with that cohesive brand offering?
Yeah, look, it's been really good, but there's no question. Some customers in certain markets, they were dealing with a house of a certain business unit before with 1 service line, and we still deliver with that. And that's all they might need from us. But we're seeing increasingly more clients see the value in coming back to us for the additional service lines. So at the moment, we've defined about 9 service lines, which go through consulting, supply of different products, managed services, cloud, secure cloud services. And that definition now we're running at around 1.5, 1.6 on average across the 1,000+ client base. So that doesn't sound like a lot, but that's actually some clients have 5 or 6 service lines, and there are 5 clients in particular, that came to us from one particular business that had 2 service lines. They're all top 5 of the top 100 ASX companies. So they might be a retailer. I won't mention their name, obviously. They might be a construction business. They might be a property developer. that those type of businesses had 2 service lines, and now all of those businesses have 4 or 5 service lines in them. And those 5 businesses alone are generating about $12 million of recurring revenue for us. So that's the sort of thing we've done. Clearly, it takes a lot of work to do that. We've got financial integration to do around the contracts, but the actual people themselves are really getting together and delivering these extra services to these clients in a really cohesive way.
Yeah, and I think just to add to that, from my perspective, so I've been with the business for almost 8 months now, so relatively newcomer, but sort of having joined as the integration was really sort of kicking into gear. I think what I've experienced and what I've seen internally is that as well as help define our offering to the customer, it's also helped us internally understand across our different divisions what our offerings are, and really kind of sets those offerings within the sort of swims lanes of each division. And that means that internally we're a lot clearer on perhaps identifying other opportunities cross service line and who is responsible for delivering those. And we've seen in the last couple of management meetings that really start to come out with these, a much more significant number of cross-selling opportunities coming into those discussions, and real opportunities coming to the floor and being converted. So it's really good to see that coming through, and something that does take a lot of work, but something that I think we are really seeing the benefit of, and also something that our competitors are probably not perhaps doing as well as we think we are. So that's also great.
Yeah, it's fascinating. I think obviously Tesserent's also been in quite a transformative period. I think initially the last time we spoke, Kurt, you mentioned you were around 50% of consulting, but you wanted to move more towards an annuity style of revenue. Obviously, the balance of that is made up of product. I'd love to know just how that breakdown's going and how that transition to more of that recurring revenue is going too.
So if you want to go that, the annuity is traveling, I think, at 42%. So we want to get that up well above 50%. So our objective as we move into, as you keep growing, and obviously we've added some consulting businesses last week, but they also have some other service lines around product and managed services with them. But there is a lot of consulting. Consulting's great because it gives us access to clients. It gives us true trusted, relationships. And what we'll be doing, going forward is obviously now adding other types of managed services to build on that particular annuity. So that gives us, we want to get that up to sort of 50%, hopefully by the end of this fiscal year.
And James, I'd be interested to know your thoughts. Obviously, we know there was a big focus on the last financial year for that $150 million run rate, which was achieved. Just interested to know your thoughts as we head into the first half report coming up. What are those key levels that investors should be watching out for? And what are those key numbers that TNT are really focusing on over this next period moving forward?
Yeah, so I think in terms of sort of key focus areas, we certainly those sort of key operational KPIs are important. So that that recurring revenue metric and the number of services per customer, which then indicate that the cross-selling is really coming through, are the key metrics that we use as lead indicators. I guess one of the things that that we're starting to sort of build a track record on in our numbers as we report them is showing the market, or being able to show the market the impact of the acquisitions and the annualization of those. But also, probably one thing that I think is probably not well known is the amount of seasonality in our business. So if you look at, on a quarterly basis, the breakdown for the last financial year, we were probably at around sort of 8 to 10% of our earnings in the first quarter, and about 25% in the second and third quarter, and up around the 40% in the last quarter. So there is a significant amount of seasonality in there. Now, it's difficult to draw a direct conclusion to this year because we've obviously had 6 acquisitions last year. So there is annualization in impact in those numbers this year. But there is a strong seasonality to this business. I think also, I'm comfortable. We obviously have internal budget targets which reflect that seasonality, but I'm also comfortable with that seasonality in that, in the last quarter of last year, we had all of the acquisitions in and delivering in that last quarter. We've obviously added another 3 this year, so that is just upside to the numbers.
Building on that question of acquisitions, Kurt, I'm sure you must get it a lot. Just keen to hear your thoughts on that acquisition strategy. As you mentioned, 6 last financial year. There's already been 3 this financial year. How are you thinking about acquisitions, and what are those focuses that you'll be looking forward to over this next period as well on that front?
Look, there's no question our focus has moved on from, just acquisitions. We needed to build a platform. We needed to put the foundations of the Cyber 360 in place. But having done that, what we're seeing is, opportunities are coming to Tesserent. So we're not going to be, we've put ourselves down an organic growth strategy. We probably need to explain, organic growth better. I think the acquisition story tends to sometimes cloud that. And hence that's why the turnover, the run rate turnover strategy was the simplest way we thought we could describe what we're doing because of that. And then, of course, we get hit with seasonality. Most IT businesses have seasonality that I've worked in over 30 years. I think our seasonality, to what James was saying, will start to even out a bit as we sort of get more scale. There's no question. So I think what investors have got to do, they've got to look at the quarterlies, and we'll always put comparisons over the previous quarter. So I think you've got to focus people back on that. Look, and we're very focused on the bottom line. There's not tremendous cost synergies in what we're doing, but there are some, and that we're starting to see. That takes a bit of time to sort of get squeezed out of the business. You want to keep the businesses focused, on clients and on their staff, not on cost reduction sort of activities. But there are stuff, we've done a bit of office stuff, and there's some infrastructure projects underway. So we'll be doing some of that. But I think we're really pleased with some of the organic growth that we're seeing. And there's a couple of businesses in particular that are just stellar performers when it comes to that. And but we're not. The trouble is we're not wanting to go down to that sort of old brand business unit reporting, because obviously we've reorganized and we're moving towards the Cyber 360 organization. So we're sort of caught between that as well. So as to sort of how much we want to sort of talk about that. I think it's just what we're doing here is such a transformational project. It is just going to take a few more quarters to start to be able for people to be able to unpack what it is we're doing.
Yeah, that definitely makes sense. I know with that past update you provided, I think that top line of the organic growth was around 40%. Did you have any further to add? Because I know investors are always like, organic growth, how can we see that it's coming through? Obviously, you guys are inside the business, so you're able to see it playing out. Did you have anything that you wanted to add to that, or any encouragements for investors about what they should really be focusing on over that next period?
So in terms of sort of that, calculating that number, it was very much looking at, and I've been doing it sort of building that up month by month, but looking at sort of first quarter performance in this current financial year versus last year. And that took into account pre-control periods as well. So it was very much calculating real organic growth, and because you were doing it against the prior year comparative period, then the seasonality is also taken into account there. What we are looking to do in our next 4C is trying to provide a little bit more of a breakdown and a bit more clarity on how those numbers are constructed. But to Kurt's point, I think it's very much on a divisional basis. So we won't be going through business unit by business unit, because it really just doesn't make sense anymore, because we've changed the business so much and we are now operating as these divisions. That's the way that we're running the business, and that's the way we're assessing our performance against budget. So that's the way we will start to kind of try and report on the business in a bit more granularity. So I understand investors wanting to see a bit more of that, which we're looking to deliver.
Throughout calendar year 2021 as well, there was a couple of interesting strategic initiatives really showing Tesserent's future-focused lens, the Tesserent Innovation, Tesserent Academy. Would love just to hear the strategic rationale behind those and how you're seeing the earlier stage of those playing through.
Yeah, look, I think talk to Tesserent Innovation first. We sort of saw opportunities as we moved through to, obviously we're building, a services business around consulting managed services in the cyber area, but there's a lot of intellectual property around products. So we saw some early stage, not startup, we saw some early stage opportunities with the Trust Grid and TACbound. So we wanted to participate in that intellectual property growth. We also probably were limited in resources, that we didn't have the capital to make 100% takeouts of those sorts of businesses. So we basically, made minority equity investments with some leverage, some financial leverage around options. but most importantly, to get a distribution agreement with those technologies so that we've got a preferred differential distribution arrangement, and then we can sort of drive that intellectual property. I think the most recent one that come in, Daltrey, is really interesting around biometric. We all know that passwords are being hacked. We all know that it's a pain in the ass to keep changing passwords and know that. So to take the actual biometric sort of signature from your body as an identity access management system into IT systems and into physical converged security, I think that's really interesting. I think the valuation of some of these businesses is only going to increase. So our minority investments are there, great. But the thing is, we're working. That's Julian still playing a role there in sort of guiding and leading. What we do there as a consulting to us on that basis. So we're really pleased about that. On Academy, I think I said before, we've always been in the training business with our own staff and with our clients. So it was time to formalize something. So we've obviously spun up, the start of that Academy business. I think you're going to see, it's only early days yet, but I think as we go into calendar year 2022, we're going to see a lot more pizzazz around what we're going to be doing with Academy. There's no question about that. And we're getting a lot of positive reinforcement around, picking that as a cornerstone foundation point of the business.
Sounds like there's plenty to watch for investors in both of those spaces, so it'll be exciting. I've got to ask you as well, we know that technology stocks across the ASX have come off a little bit in terms of share price, and Tesserent has definitely not been immune to that. I'd love just to hear some of your reflections in terms of the share price, and what do you think maybe the market is missing about the ASX TNT offering at the moment, because the company progression has continued in the right direction over this past period?
I have had, I've had a number of discussions with investors about this, and obviously conscious of that our price has come off reasonably materially, and I think I've experienced similar things in previous roles. So when I was at Bellamy's, a CFO had the same situation, but I think looking at it here, I guess I'd reflect on the fact that so, we do have broker coverage through Shaws. They have a target price on the business. And if I look at their forecasts, and they are, they're, broadly where we would see the business going, acknowledging that we don't provide formal forecasts. But I think, that, and I haven't seen their valuation model, but I think their valuation is founded in sensible forecasts, and our forecasts are very much, we are on target year to date against our budget and our forecasts. So we are focusing on growing the business. You didn't acknowledge that there are other tech businesses in the market that their share prices have come off as well. I think it probably comes back to a little bit of what I was discussing before, perhaps understanding the seasonality in our business, and perhaps market expectations in Q1 were greater than we perhaps delivered. But again, that was built into our plan. And I think that, to some extent, the market is probably just waiting for us to demonstrate the delivery through the rest of the year. And we are confident in our plans and confident that we will deliver that. So my hope is that, as we start to do that, then the share price will come back to, a level which I see as being, closer to where we see that valuation from Shaws, which, I do believe that the shares are significantly undervalued at the moment. But, that's just a personal view. That's not a reflection on, any sort of valuation metrics. And I think the market across the board in the tech sector, we are seeing that across a number of businesses.
I think also, to what James has said, I think we're also a massive opportunity to be able to invest in the cyber theme. I mean, there's half a dozen cyber type companies on the ASX. We're clearly the largest, and I think that it's still a great opportunity with where we are at the moment to get involved in that. I think late last year, there was obviously a lot more. There was a lot of hype. The federal government came out. There was a lot of stuff around cyber that probably propelled. We had some strong tailwinds there. Those tailwinds have not gone away. We just saw, a few days ago, the new attack vulnerability come out, the Log4 thing. We're going to see a lot more about that. So those tailwinds have not gone away. there's probably been other distractions. People have been going to the space. Batteries have been getting better. You know some of the other success stories out there. So there's probably been some other interested sort of things. But I think we're just head down, building a solid business around this. We're not about ambulance chasing the latest cyber news. We'll do a bit of marketing. We definitely will be looking to strengthen our investor relations focus. James might want to talk a bit about that, but going into 22, so I think if we do that, and if we just continue to execute, the share price will take care of itself.
And just picking up on Kurt's point, so I think now that we are a larger organisation and post capital raise, we have a number of institutions on board as well, and funds. I think it is starting to be time where we look at bringing in someone to provide a bit more of a structured approach around the investor relations piece, and how we communicate to the market, and making sure that shareholder information and questions are being appropriately answered. So we are actually actively looking at that, at getting a resource in internally to drive that.
Yeah, I appreciate you sharing those reflections. And I guess just building on that as well, we know there's a growing runway ahead. It's a sector that will continue to expand. If we are looking out into 2022, what do you want investors to be judging you on? What are those metrics that you want to be judged on over the next year?
Well, I think you've got to look at the market. If you want to invest in, if you think cyber is going to be an interesting sector to be in the next few years, then you should invest with Tesserent. If you think that it's going to keep growing, Gartner have laid down, I think, a $7.6 billion run rate just in Australia on cyber. We think that we probably address $5 billion of that. It's growing at 8% compound annual growth rate. So that means the market's growing by somewhere between 1.5 to 2 Tesserents a year. So there's plenty of business there. Plenty of opportunities for us and our competitors. We can probably grow we don't need to take a lot of market share. We are taking market share, but we don't need to because customers' demands are increasing. So I think that's one thing. And I think you've obviously got to look at the sovereign story and where we're positioning ourselves with Canberra in the federal market. I think that's gonna play out quite nicely for us, going into 2022. And we're starting to see a lot of talent. So not only I think I mentioned this on our last session, we're starting to see talent. Yes, we've been acquiring businesses, but we're also starting to acquire some serious talent. Recent gentleman just joined us, was Deputy Chief Security Officer for one of the big insurance companies, wanted to come and work at Tesserent, wanted to be able to take the kit bag, the tool bag that we've built, and work with clients on delivering some stuff that he hasn't been able to do in previous smaller businesses that he'd worked in. So he sought us out and has come to us, just as one great example. And it's happening at different levels of the company.
It sounds like the building blocks are all in place. We know it's a sector and a TAM that will continue to grow moving forward. Maybe some final reflections from you both about the past year that's been, and also the opportunity up ahead that you see, and why you think Tesserent's got that special sauce moving forward. James, did you want to kick us off, and then maybe Kurt to finish it off?
Yeah, sure. I think, if I'm looking at sort of stepping back and looking at overall messaging, we have been growing rapidly through acquisition, and that comes with some risks, I think, and a hell of a lot of acquisition accounting, which has been fun. But I think, the reorganization that we touched on before, and that process we've gone through, I think has de-risked the acquisitions and the integration piece a lot. And as I said before, is really starting to bring those cross-selling opportunities to the floor that we were looking for. I think as we move forward, we'll still be doing strategic acquisitions, and we'll be looking at sort of building more depth into the existing business, because we believe we've largely got the product offering that we want to take to clients. So those acquisitions will probably slow down a little bit and be more strategic. And there is a shifting focus to make sure the organic growth is there and coming through, which will add and build real value for the shareholders.
For me, it's really around really getting the assets we've got working together. And these are key people. I mentioned before how privileged we are to have our senior leadership team, founders of some of these businesses that have stepped up and are really making making, they're driving us and the board to be better. And I think that some of them, quite a few of them, are engaged across business unit in developing, not only taking one services in a cross sell. So, we're taking some services into a new geography or into a new market. So we've got a number of projects around that, around New Zealand, into Canberra. But we also have got some collaboration around creating completely new businesses, new service lines. And so I think that's the exciting thing as well, that we will actually be creating some startup businesses within Tesserent, and that will then obviously add to the overall organic growth. So I'm really excited with some of the initiatives that we've got sort of planned, internally and with our clients, and we'll talk more about those. We've got some interesting announcements perhaps in the new year around some of the things we'll be doing around those things. So obviously we're limited. We can't talk enough about what we do with clients. We'd love to be able to talk more about that. But obviously we do have confidentiality and things like that in place with clients and that sort of stuff. But there are ways and there are things that I think we'll get better at actually focusing on what it is we do and what our purpose is going into 2022.
That is the Tesserent story. It's ASX TNT. If you did enjoy the video, don't forget to hit the like button. Feel free to share it out. We make daily videos each and every day, so make sure you've subscribed and turn your bell notifications on. It's a fascinating story. Congratulations on 2021 and a transformative period. We'll definitely be watching to see where Tesserent heads into 2022. James Jones, Kurt Hansen, thank you guys so much for joining us on the channel.